What's up, everybody? This is Sunko, the Korean bro. Today is 2022. Um, it's September, October, November, December, October 4th. Let's read stock market articles, okay? Fourth quarter opens with a bang. U.S. futures jump sharply. Here's what makes Amazon a sum of all parts commerce juggernaut. China-based EV maker BYD sets for a big European-Japanese expansion. Tyson Foods takes a licking and keeps on ticking lower. Small cap catalyst pharma is among market's best price performers. Is Illumina still the game changer in genomic sequencing? The institutions bought CarMax in quarter 3. Now it's cheaper. Here's what a strong US dollar means for your stocks. It's time to buy the dip on Domino's Pizza stock, says analyst. Archer Daniels Midland dividend hero with 49 years of increases. This is a memorable time to buy into Micron technology. SunPower is ready to power up triple-digit earnings gains. Tyson Foods takes a licking and keeps on ticking lower. Okay. First article, okay? Fourth quarter opens with a bang. U.S. future jump sharply. Fourth quarter. So October is the beginning of fourth quarter. Okay. U.S. futures are sharply higher Tuesday, potentially extending a quarter opening rally this week after a dismal September. Futures for the Dow Jones Industrial jumped 1.3%, and futures for the benchmark S&P 500 rose 1.6% following Monday's 2.6% gain. The tech-heavy Nasdaq Composite, which has been pummeled, lead the way with a 2% lip. Global shares also bounced back, with European markets tracking gains in Asia and the US Monday after some weak economic data raised hopes that the Federal Reserve might step back from its aggressive interest rate hikes. Also bounced back, with European markets tracking gains in Asia and the US Monday after some weak economic data raised hopes that the Federal Reserve might step back from its aggressive interest rate hikes. So you never know, but Federal Reserve, they could possibly step back from its aggressive interest rate hike. Okay. Report Monday on U.S. manufacturing came in weaker than expected. Okay. Along with data showing a drop off in construction spending from July to August, it is hoped by many investors that the Federal Reserve might ease off on its aggressive interest rate hikes intended to beat down high inflation that has rattled businesses as well as families. By raising interest, the Fed is making it more expensive to buy a house. By raising rates, the Fed is making it more expensive to buy a house, a car, or most anything else on credit with the goal of slowing the economy just enough to starve inflation of the spending that has driven prices higher. The Fed has already pushed its key overnight interest rate to a range of 3% to 3.25%, off from virtually zero as recently as March. Most traders expect it to be more than a full percentage point higher by early next year. Okay, fourth quarter. What I can get from this article is that fourth quarter starts. October is the beginning of fourth quarter. And the Federal Reserve a cool step back from an aggressive rate hike. That's all I can get from this article. Here's what makes Amazon a sum of all parts commercial unit. Key point, Amazon continues to grow even after 27 years of operation. Amazon Web Services is the profit driver as revenues climbed 33% to $19.75 billion in its recent quarter. Over 1.9 million small businesses, third-party sellers account for 58% of the sale on Amazon. 1.9 million small businesses, third-party sellers account for 58% of the sales on Amazon. I myself did some kind of sales. Not. It's not that it was my business. The company that I work for, was also one of the small businesses in Amazon, and as I can read from this article, small businesses account for 58% of the sales on Amazon, right? Okay. Let's see. Commercial retailer marketplace and technology applications behemoth Amazon has grown into a juggernaut of commerce. Amazon is a paragon of the network effect, as its ecosystem often induces the same customer to use multiple services simultaneously without a second thought. Amazon is the number one top shopping website, the number five top beauty destination among Gen Zers, the number second most trusted brand in America, according to Piper Sandler Generation Z survey and Morning Consult. Familiarity with the brand and quality of services have become ingrained into the daily habits of consumers worldwide. It's hard to fathom that a company that does over half a trillion dollars in annual sales once started from a garage selling books online in 1994. Amazon enjoys the massive economies of scale and dominance that gives them a halo effect when entering new industries or introducing new product services. It has over 300 million active customers and over 100 million Amazon Prime members. Shares have risen from a single digit to over $3,000 per share in the past 27 years. A 34-1 stock split has made shares more accessible to retail investors. Here's a breakdown of the many moving parts of the Amazon journey, pioneer of e-commerce and virtualization. And the Amazon effect, e-commerce and virtualization. One of the original pioneers of e-commerce, and at one point had a 49% market share of the e-commerce industry. Okay. Disrupting and dominating the market categories once they set their sights on entering. Okay. Revenge of the little guys. However, the irony here is that unlike big warehouse clubs like Costco or major retailers like Target and Walmart, Amazon derives 58% of all sales through its third-party sellers like eBay, Etsy. Amazon empowers the little guy. So Amazon, they don't do it themselves. They are using a third-party seller to drive their business. Their main source of growth is small retailers, and they're basically helping them to thrive their business more. Because in a way, small businesses grow, and at the end, Amazon grows. So if you can't beat them or build them, then just buy them. It's slowing but still growing. It's all about why Amazon is growing, and it's gonna grow sooner or later, and later in the future, even 10 years later. I don't know. Oh. Mm. Let's look at the price of Amazon. Mm. Okay. This is a memorable time to buy into a micron technology. Okay, micron technology is a blue chip tech stock trading at a deep value. The company's weak guidance may already be priced into the stock. Micron Technology has a healthy balance sheet and is well positioned for a slowdown. Shares of Micron Technology are down nearly 50% from their post pandemic highs, driven by the same maladies as other parts of the market and now presenting a very memorable time to buy. At these levels, near $50, the stock is valued at more than 6 times its earnings, and this is a blue chip tech stock, fundamental to the global economy we're talking about. Even Intel trade at nearly twice the value, and it's no flash name itself. Not one worth such a large premium in the face of slumping market anyway. The takeaway is that the shares of Micron are trading at a firm level of support. The company's outperforming expectations and is well positioned for the downturn in business and so attractively priced at these levels. Micron circles the wagon following mixed quarter. Balance is ready for the slowdown. Moves offer support. Okay, micron technology. Mm, Manufactures and sells memory and storage products worldwide. The company operates through four segments: compute, networking business unit, mobile business unit, storage business unit, embedded business unit. Provides memory and storage technologies comprises DRAM products, which are dynamic random access memory semiconductor devices with low latency that provide high speed data retrieval. NAND products are non-volatile and rewritable semiconductor storage devices. Hmm. Memorable time to buy into micron technology. Is it for real? Healthy balance sheet. Hmm. Hmm. Okay. I'll I'll consider. Archer Daniels Meatland, dividend hero with 49 years of increases. AMD has a secret weapon for attracting investors, a long history of dividend increases. Fundamentally, the stock remains sound. With a 3-year earnings growth rate of 31%, Wall Street expects earnings of 6.83 per share, up 32% from 2021. Amid the volatility in commodity prices since Russia's invasion of Ukraine in February, established large cap Arthur Daniels Midland, a new company, Farafi Global, appears set to capitalize on continued uncertainty. Some analysts warning of a winter food shortages in Europe and the US. We've seen inflation driven buying focused on basic staples. That means some agricultural food processing stocks and well packaged food stocks have been performing well. Whereas a young, volatile, speculative stock like Ford Rafik can pop up on screens identifying fast movers. AMD shows up differently. This is a multinational food processing and commodities company founded in 1902. Mm. Arshel Daniels Wieland. Arthur Daniels Midland. What is this company? Procures, transports, stores, processes, and merchandise agriculture, commodities, products, ingredients in the United States, Switzerland, Cayman Islands, Brazil, Mexico, the United Kingdom, internationally. The company operates through three segments: ad services, oil seeds, carbohydrate solutions, blah blah blah. So none of my interest. Consumer defensive. Okay. Now let's take a look at China-based EV maker BYD. BYD said for big European and Japanese expansion, Chinese EV manufacturer BYD said Monday that third quarter sales almost tripled. The company is rapidly expanding into Europe and boosting its presence in other Asia Pacific regions. Fellow China-based EV makers Li Sping and NIO also increased sales in the quarter. When Americans are out and about and see electric vehicles, it's common to see those made by Tesla or every once in a great wow, Rivian. Meanwhile, legacy automakers like Ford and General Motors are rolling out their own versions of electric vehicles. Amid all the activity by US based automakers, Chinese EV maker BYD has aspirations to be a global company, not limited to its current outsized market share in its home country, not limited to its current outsized market share in its home country. Its vehicle offerings include hybrids and those powered entirely by electricity. On Monday, the company said the third quarter vehicle sales almost tripled. It's introducing new models such as the Seal, for which it has high hopes. Wall Street expects BYD to earn $0.46 per share for the full year. That would be a 171% gain over 2021. Next year, that's seen rising another 74% to $0.80 per share. US market is still in its sights. BYD expanding into Europe. Last week, the company hosted an event in Netherlands where it revealed three EV available for sale starting this quarter. Introduced its Tang EV in Norway in 2020, but is adding other markets. It recently began shipping EVs to India, New Zealand, and Australia, with plans to expand further in Asia, including into Japan. BYD. Okay. Buy rating on the stock. Okay. Hmm. Jump into high growth industry like this, but evaluate carefully how each stock is doing, what market it's entering, and how Wall Street views the company's future prospects. BYD. Five best Chinese stocks to buy and watch. EV makers report quarter three sales. Fresh record. Okay. Hmm. Research, development, manufacturing, sale of automobile and related products in the People's Republic of China internationally. It operates through three segments: rechargeable batteries and photovoltaic products, mobile handset components, assembly, service, and other products, automobiles and related products, and other products. Hmm. Yeah, BYD. Hmm. Okay, BYD, BYD. Tyson, Tyson Foods take a licking and keeps on ticking lower. Tyson faces growing headwinds from a strong US dollar. Rising inflation is driving consumers to switch to cheaper generic brands. Tyson shares are trading at a historically low 7.5 times forward earnings. Okay. Next, small cap catalyst pharma is among market's best price performers. Small cap biotech catalyst pharmaceuticals. The company has a steady history of price appreciation going back 1 year, even while the broad market declined. Is Illumina still the game changer in genomics sequencing? The cost of sequencing a single human genome has fallen from $100 million to 600 since 2001. I don't know anything about Illumina, so I'll just skip this one too. Oh, okay, there we go. Let's read these two articles. One is about a strong US dollar. Okay, the US dollar index is up 17% this year, hitting 20-year highs. Okay, Netflix stock is down versus the Nasdaq index down. Netflix gets 60% if it sells from overseas. Okay, Humana stock is up. Humana stock is up 4% for the year. As it collects 90% of its revenue from the U.S. state and federal government health benefit programs. What causes a strong U.S. dollar? Okay, interesting article, right? Okay, the headline pointing out the strong U.S. dollar is becoming commonplace these days. Okay, a strong U.S. dollar may be good for U.S. citizens buying foreign products as their buying power rises, but it's detrimental for overseas buyers and U.S. companies that sell to them. When the US dollar is strong, it's detrimental for overseas buyers and US companies that sell to them. When the US dollar is strong, international buyers have to pay more of their currency for the same US goods and services, leading to a drop in demand or a search for alternative sellers. A combination of strong US dollar and rising inflation is a one-two punch in the gut for demand for US products. Strong US dollar and rising inflation is a one-two punch in the gut for demand for U.S. products and services to overseas buyers. A strong U.S. dollar also tends to result in a weak stock market as they also move inversely. Keep in mind the strength or weakness of a currency is based on its comparison to another currency. The US dollar index measures the dollar against the basket of other currencies, and it's up 17% for the year compared to minus 25% for the S&P 500 and for the Nasdaq. Okay, what causes a strong US dollar? When the US has relatively the strongest economy with the least geopolitical risk compared to other nations, global investors move money into the US dollar. By selling their currency to buy US dollar, they weaken their currency and strengthen the dollar. The euro has suffered due to the geopolitical tensions emanating from the Ukraine war. Okay, there you go. Okay, people suffer from low value of currency. So, so a lot of European, there's a conflict between Russia and Ukraine, right? So they feel like they are in danger. So instead of having their own currency, they think they would rather have a U.S. currency because it's more worth it. It's not risky. It's less risky. So here it is: geopolitical tensions. The British pound has fallen off a cliff to a record low due to its self-inflicted financial crisis. Okay, it's not only a geopolitical geopolitical tension or anything else, but it could possibly be caused by a self-inflicted financial crisis, uh, which prompted a misguided fiscal stimulus package meant to kickstart the economy but could backfire and stoke more inflation. The Fed exacerbates. Okay, that's right. That's right. Okay, strong U.S. dollar. The U.S. dollar strength is also fueled by the U.S. Federal Reserve interest rate hikes. The U.S. dollar has pretty much outperformed all other assets classes this year. Up until a few months ago, the markets didn't really care too much for the strong U.S. dollar impacting earnings since volatility was taken into account with constant currency metrics. Constant currency refers to using a fixed exchange rate that eliminates volatility and fluctuations when reporting financial performance. Frankly, the markets gave a pass to companies that reported weaker earnings due to FX currency volatility. No more whole passes. This all changed when markets realized the temporary nature of fluctuating FX had transformed into a deadly grind with no reprieve in sight as the US dollar index hit 20-year highs. Globalization was the goal for companies seeking to grow their scale. However, a strong US dollar actually punished them. For investors, it's important to know the revenue mix of the domestic and foreign revenues of their companies. Companies that do most or all of their business in the US should perform better than multinationals. Healthcare companies like Humana derive all their revenues in the US, with over 90% of their income from federal and state health benefits program. This is why shares are up 4% versus down for the S&P 500. Yeah, like revenue, domestic revenue, and the revenue they get from overseas. Mm. It's a matter of a percentage. If one company gets most of revenue from overseas, then uh, they would be suffering from they be suffering from what is it, strong U.S. dollar. But whereas if the company's main source, main benefit they get is from domestic resources, then they be happy. Uh, Companies mentioned in this article. Okay, losers. U.S. Importers benefit from a strong U.S. dollar. But U.S. exporters of goods and services get shortchanged with strong U.S. dollar. While the U.S. stock market has fallen this year, companies with a major chunk of their revenues derived from overseas are getting hit even harder than the benchmark indexes. So the new point that I can get is that oh that uh hmm, geopolitical tension and recession has caused strong U.S. dollar. People feel uh, less stable, and instead of having their own currency, they think they would rather have a U.S. currency because it's more safe. So that was one of the main driver um, that puts U.S. currency higher value. Uh, Deep on Domino's Pizza stock. Okay, shares of Domino's Pizza are up 3.3% at 326 pre-market, following an upgrade from UBS. Though the analyst cut its price target on DPZ to $385 from $430. It raised its rating to buy from neutral, saying the demand for pizza is strong and concerns for demand weakness are overblown. In its note, UBS cites several catalysts for the pizza chain, including price increases on select promotion, efforts to improve driver staffing shortages, and potential third-party delivery partnerships. The majority of the covering brokers lean pessimistic as 16 of 22 still rate dominant pizza stock a hold or worse, which means additional bull notes could soon be on the way. Okay. Let's go over to Yahoo Finance. Consumers still have $1.3 trillion in extra spending power. Stocks extend rally as investors hope for a policy pivot. Kremlin responds to Musk's Ukraine peace plan. Amazon stock has gotten too cheap to ignore analysts. Apple consumers are cutting back on spending. Amazon's deals raise question number one for investors. Buffett's a likely successor buys $68 million of Berkshire stock. Ray Dalio no longer think cash is trash. Nvidia AMD Ryzen report Biden will further restrict China exports. Okay. Looking for beaten down tech stocks, here are two JP Morgan likes. Kathy Wood art snaps up Tesla after stock plunges and delivery miss. Wall Street capitulation calls get ever harder as stocks bounce. The stock market strategy says the coming recession could be the biggest ever. I recommend prayer. Okay. Amazon and Uber are JP Morgan's top internet picks. Here's why. Stocks will continue falling even after Fed pivots, warns Morgan Stanley strategist who predicted the bear market. Okay. Pound stock climbs as bikes to be in 5,400 Hilton hotels. General Motors EV Bolt sales a record. Okay, let's go. Consumers still have $1.3 trillion in extra spending power. Morning brief. Despite inflation's negative impact on purchasing power and sentiment, consumer spending growth continues to be remarkably resilient. Inflation's negative impact on purchasing power and sentiment, consumer spending growth continues to be remarkably resilient. Even if we're in recession, people still spend much money. On Friday, we learned personal consumption expenditures increased by 0.4% month over month in August. Adjusted for inflation, they were up 0.1%. Consumers have money. Okay. In addition to benefiting from wage increases compounded by persistent job growth, consumers are sitting on a mountain of excessive savings. The extra cash consumers piled up since February 2020, thanks to a combination of government financial support and limited spending options during the pandemic. Okay. Let's read this carefully. It looks like this is an interesting article. Okay. Stocks tumbled to their lowest level since November 2020. The S&P 500 fell 2.9% to close the week at the index now down 25%. There were some unnerving developments in the world in recent days. The UK government unexpectedly announced tax cuts that sent the British pound tumbling and drew criticism from the IMF. The Nord Stream gas pipeline was damaged, putting Europe's energy security at greater risk. Yes. Russia announced the illegal annexation of regions in Ukraine. Corporate America, according to Apple, Nike, Matra, and Carmen's, is not selling as much stuff as planned. Federal Reserve officials, meanwhile, continue to reiterate the central bank's hawkish stance despite falling stock prices and the rising risk of recession. It's unclear how all of these events will unfold, and there's no telling what other news may emerge that could destabilize world financial markets. We do, however, know there is a long history of events that rocked the markets and shocked the economy, and we also know that the market and the economy eventually emerged stronger. Read more. Okay. There's a lot to learn from stock market history. One thing is for sure, if you can commit the time, you don't want to miss the rally. If you can commit the time, you don't want to miss the rally. Wow. The market always comes back stronger. The chart below comes from E. Roche Cox. Shows percentage loss in the S&P 500 during bear market since 1956. And the percentage gains in the bull markets that followed. Losses and the percentage gains in the bull markets that followed. Okay. It's a reminder of a Ticker stock market truth number 4. Stocks offer a symmetric upside. In other words, while you can only lose as much as you put in, you can earn multiples of what you put in on the upside. The first 2 years of recoveries are huge. This table comes from a Carson Group's Ryan Dietrich. In year one of a market recovery, the S&P 500 has returned a whopping 30% on average. In year one of a market recovery, in year two, the S&P 500 adds another 37% on average. 1 year returns after lows. 2-year return after lows. Stocks tend to do well after bear markets. Okay. In year one of a market recovery, 30% on average. In year two, another 37% on average. The good days happen near bad days. From a Vanguard's Greg Davies, successfully timing the stock market is near impossible. Successfully timing the stock market is near impossible. Okay. Partly because the best trading days tend to cluster around the worst ones. And missing just a few of those rally days has a surprisingly outsized impact. Looking at market data going back much further to 1928, being out of the stock market for just the best 30 trading days would have resulted in half the return over that period. The best and worst trading days happen close together. The best and worst trading days happen close together. 20 worst trading days. 20 worst trading days. For more on how the best days often follow the worst days, Stocks can rally as unemployment climbs. Unemployment climbs, stocks can rally. The chart below comes from JP Morgan Asset Management Q4 Guide to Markets. It shows how the S&P 500 and the unemployment rate moved around the last 9 recessions. Market inflation points, recessions, and the unemployment rate. Unemployment rate, S&P 500 total return. Unemployment rate goes up, S&P 500 total return goes down. So which means if unemployment rate goes down, S&P 500 total return goes up. There are many instances where stocks will rally as the unemployment rate climbs for a month. Recession. Many instances where stocks will rally. Rate climbs for months. Unemployment rate climbs for months. It's notable in time as we prepare for U.S. labor market to cool. It's also a reminder that stocks are a discounting mechanism, pricing in what's expected to happen and not what's currently happening. None of the above stats will tell you much about where the market will be in the next few days, weeks, or months. We could be at the bottom or we could go much lower. But for long-term investors, time in the market matters more than timing the market. Time in the market matters more than timing the market. It pays to remain invested and balanced precisely when it is most difficult to do so. It pays to remain invested and balanced precisely when it is most difficult to do so. Okay, I just found a really interesting article, and it's written by the guy named Sam Rowe. I think he's like the founder of the name Ticker. I'll probably read this article tomorrow too. He's got a lot of interesting articles. The way he views economic market is really interesting. I think it could possibly make me have a really deep insights about what's going on in the stock market. I know like simple terms and the word uh, lightly, but then I think he could definitely make me have a deeper insights because he's got a lot of charts and statistics This shows not the best timing, but the reason why we have to uh, keep investing even we're in recession and like that kind of stuff is writing it. Uh, okay, I'm gonna go over to next article, and we still have a lot of articles to read. So I'm gonna just briefly read every articles. Hmm. Stocks extend gains as investors hope for policy pivot. U.S. stocks charged higher at the start of trading Tuesday as Wall Street maintained momentum from the previous session's rally. The benchmark S&P 500 surged 1.6% early into the session, while the Dow Jones Industrial Average jumped at roughly 380 points, or 1.3%. Oh, okay. Kremlin positive that Elon Musk suggests the Ukraine peace deal. Okay. Hmm. Amazon stock has gotten too cheap to ignore analyst argues. Attract investment. Cutting back on spending. Apple's consumers cutting back on spending. No longer thinks cash is trash. Okay. Nvidia and AMD rise on report Biden will further restrict China exports. Shares of semiconductor makers rose Tuesday on report that said the U.S. was planning new restrictions on exporting cutting-edge semiconductors to China, stepping up efforts to prevent second-largest economy from manufacturing the latest circuitry. Well, like they are U.S. and China uh, because technique is confidential. Biden is highly aware that techniques that they have has to be techniques that they have has to be keep it has to be mm, protected. Looking for beaten down your two JP Morgan like Vakaza. Mm, okay, Roku is also listed again. Looking for beaten down tech stocks. Your two JP Morgan likes. Two JP Morgan also likes Roku. Okay. Hmm. Prayer. Patent stocks climb as bikes to be in 5,400 Hilton hotels. Patent Interactive stock was rising early Monday after the fitness company announced a partnership with Hilton Hotels. Okay, announced a partnership with Hilton Hotels. Okay. The seller of stationary bikes and a treadmill said that by the end of this year, some 5,400 U.S. Hilton branded hotels will include at least one Peloton bike in every fitness center. Hilton members will also be offered a Peloton app trial, which can be used without the company's equipment. Okay. Okay. Oh, I'm getting tired. Okay, I'll see you guys tomorrow, and happy Tuesday night. Bye bye.